What's going on, April? What's wrong?
I'm getting such a headache. It's tax season, and I'm trying to get my taxes done, and I've got all these papers everywhere, and I'm just not a bad person.
Really? Sounds like you're having a taxing time.
Stressing. Can you help me? Can you do taxes?
I can't. I can't. I know some basic information, but I tell you what, I've got this friend, his name is Tom Janney, and I think he'll come and talk to us. What do you think about that?
Oh, wow. Yeah, maybe, I mean, he's a tax person, he's a CPA, so that sounds like it would be really helpful.
Well, let's do that on our show.
Okay, let's do it. Hi, I'm April Martin.
And I'm Shelly Barnes.
And this is Living Well with April and Shelly,
where we're raising kids, eating right, spending smart, and living well.
So welcome back, everybody. Today we're honored to have a guest with us from here in Smithville, and that is Mr. Tom Janney. And Tom is the CPA and owner at Gammon and Drueck Associates here in Smithville, formerly known as Janney and Janney Associates.
That's right.
So Tom, tell us a little bit about your background and just whatever you want to share.
Well, I went to high school here right at DCHS, and do I have to say what year I graduated?
No, that's fine.
It's been a while. Y'all can figure it out. And from here, I went off to UT in Knoxville, and I came back, and I worked in Nashville for a while at one of the big firms, and just hated it. And I just wanted to come back home and be with people that I knew and could really work one-on-one with. And so the rest is history. That was in the late '80s, so you can extrapolate from there.
Wow.
So what are some things you did at UT? I know you did a few fun things while you were there, right?
Well, it wouldn't be UT if you didn't do a few fun things.
That's true.
But I was in the band. DeKalb County's got a great band program, and so I got a band scholarship partially, and also an academic scholarship. And so I was in the UT's band my freshman year.
What did you play?
I played trombone. Which the cool thing about trombones is they're right on the front row. So when you're marching out in the stadium, you're going right down the middle, and that crowd is roaring, and it's just amazing experience. It was a lot of work.
Yeah, I was reading on the website that you even go back to play in the alumni.
I do periodically. And all the young ones sit there. They have to spread out to the side and let the oldies march through, and it's kind of embarrassing. They kind of look like, oh, I hope I'm never that old.
I don't go to too many ball games, but I did go to one in the fall. I don't remember who they were playing, and I guess that was the first time that I'd noticed the alumni were there. You might have been there at that game.
It's possible.
Yeah.
I don't go every year, though.
Yeah.
So, yeah.
How exciting. Yeah. So we know that you founded the CPA firm that you're at now. You've been there many years.
Over 30 years.
Wow.
And we had a big announcement. I think there's some people on your call on your video that are from Wilson County as well as DeKalb County. And we have recently linked hands with another firm that's in Wilson County named Gammon and Drueck.
Awesome.
And so that's where that funny sounding name came from. But I'm still here, not retiring, just kind of scaling some things back just a little bit.
That's great.
You guys keep talking about taxes though, and you're going to be like me.
Well, my husband is already like that.
Oh, well,
y'all might have already talked.
I guess so.
Past.
Well, Tom, what can you share with us today? Just some general tips for people, that people are starting to think about. It's time to start working on that and filing it before the deadline. And I know I'm working on mine right now. I'm almost finished and ready to go.
Oh, yeah. It's that time of year. It's like you get through Christmas and then this starts,
Yeah.
But at least it's winter time and there's not, heck of a lot going on. But I'll start by asking you guys a question. Do you all know what the number one answer is in the world of tax?
The number one answer to the question.
Answer. The number one question and answer.
Oh, the number one question and answer. What is the standard deduction?
That's really good.
Because I have to ask that every year.
When someone asks you a tax question, the number one, always 100% correct answer is, it depends. It really does depend. You see this book here? This is what I got when I went to the UT Extension Service tax seminar they have every year.
Awesome.
And it's a wonderful class, but this is just the part they give you in paper, and then there's more. So everybody's situation is a little bit different. And everybody's going through different things financially. So I've tried to think of some common things that might be a benefit to.
Yeah, absolutely.
all of us.
Anything that you can share with the general public, that'd be great.
Yeah. Well, you want me to fire away?
Yeah, let us know.
Well,
Go at it.
Well, let me, besides the it depends, I think one of the most common questions I get from people that are employed, maybe each spouse has a W-2 and it's a pretty basic tax return, they're always asking me, what can I deduct? You know, that is the number one question. And again, the number one answer is it depends. But basically, it is harder and harder nowadays to take what they call itemized deductions. Because the Congress has made that standard deduction that you mentioned so much higher. For married people, it's about $27,000 at this point. So you've got to have mortgage interest, charity, property taxes, all that good stuff greater than that before you can do what people call the long form or the itemized form. So that's one thing that's really important to keep in mind. But they have added a few things lately. And one of those is, if you're married, you can take a $600 tax deduction right off the top of the return for charity. So you don't have to itemize. So most people probably give at least that much, you know, every year to church or charity. So there's $600 you can do. And don't forget, under certain circumstances, you can do IRA deductions, individual retirement account deductions. It all depends on whether, again, depends whether you're in a retirement plan, how high your income is, and all that kind of good stuff. But that is a tax deduction. Now you got to remember, with an IRA, you get that deduction, but then when you're old and gray or old and bald, when you take that money out, you have to pay taxes on it. But you try to make it grow as long as you can. So IRAs are another tax deduction. And then another just really common thing, who's got a high deductible health insurance plan? You know how those are nowadays. You go to the doctor and you're like, well, why do I have health insurance? Because God forbid, you really don't want to use it in some ways, because if you reach up into that level, something's going on. And so a lot of us have these big co-pays, and we have to go a long way before we can deduct. So there's a thing called a health savings account, an HSA, that you can open up. And I have to put my clickers on here. I believe you can do $7,750 if you're married into an HSA, and another $1,000 if you're over age 55. And that's really a neat way of getting a tax deduction and using it for out-of-pocket medical. Does that make sense?
Yeah.
I always tell individual taxpayers that are on a W-2, if you have a 401k at your employer's office, always at least put in what they're going to match.
Yeah, definitely.
That's like doubling your money. If they're going to put in 3%, you should put in 3%.
It's free money.
Which is surprising that some people don't do that. It doesn't compute.
Right.
To me.
It's just it's really like, and you know, you can select how you want that money invested, how aggressive you want to be, how conservative you want to be, all that good stuff. But that is the secret. One secret to building wealth is just that consistent, week to week, month to month investment.
Right.
As you go, a little bit at a time, and you'll just be amazed at what it grows into someday.
And I know
Don't pull it out, you get a 10% penalty.
Ooh, that's true. But I was going to say, some companies, you know, also hold like workshops, and you know, you can talk to your HR people to get some better advice on investing in that 401k. I know last year we had our big extension conference, and Johnny and I both went to a session and learned a lot of things that we didn't really know about related to our 401k. So that was good. And so talk to your HR people at your workplace to see, what benefits you have at work.
That's exactly right. Don't use those people for what they're there for. That's what they are paid for. And have them educate you, because that's just a free resource right there that your employer is providing that just as, can be fantastic, you know. So and then here's another question I get. Maybe my employer reimburses me mileage, but they only give me 40 cents a mile. But I know the IRS allows maybe 62 cents a mile, something like that. I've got it written down here somewhere, but it's a lot more.
Just
and people, yeah, it did. It just went up this year. Google it. And people ask me, can I deduct that? And that has all gone away, and that disappoints people so bad. So if you buy a computer for work, if you have mileage that you're not reimbursed, if you have dues and professional fees, if you have anything like that.
All that's gone
All
away.
that's gone.
Wow.
And so it's,
wow.
you know, and
That's interesting.
you know why they did that?
No.
Because that is a really hard thing to administer by the IRS. And so what they want is for the employer to manage those reimbursements, and then the monkey's on their back. Whereas if you are deducting it on your tax return, that's just one more thing that the IRS has to look at and pull for audit if they rarely pull audits, but if they can, yeah. So it's in a way it's a simplification, but if you have that situation at work where you can't deduct it personally, inquire of your employer if they would consider reimbursing you for these expenses.
Okay.
And sometimes they'll do it. You might be surprised. You know?
Especially since there's been that change now.
Yeah, exactly, exactly. So check that out. What else is on your mind? What else are you guys tearing your hair out about over here?
Well, April and I were talking about, changing your tax withholding to increase your take-home pay. And so, can you talk about that? And that's what we hear, but we don't really know what to do or what the right thing is to do. Yes, you have to talk about that. No, you don't have to do anything.
Okay. So, y'all heard.
It sounds like an easy question.
It sounds like, doesn't it sound like an easy question? Doesn't it really sound like an easy question? It is not an easy question anymore, in my opinion. The IRS, about 4 years ago, they changed the rules on how your withholdings are done by issuing a new W-4. Have y'all ever had to fill out a W-4 when you first get hired? You put in your name, address, and social. Yeah. Well, it's a one-page form, and back in the day, most people, whether they were married or single or whatever, they would put single and zero because everybody loves a tax refund. And so filing single is the highest, well, it's one of the highest withholding rates. So people do that, and then they would get these fun refunds. Well, Congress decided that they wanted people to spend their money all during the year and not wait for a refund. So they came up with a new Form W-4. So if you're ever handed a W-4, it's incredibly confusing. And guess what? They tell you to go online to the IRS website and fill out a worksheet.
Yes, because see, my kids are just like in their early 20s, and I had to help them, and I was like,
what is
this happening? This is not what I remember.
It has caused more confusion.
Wow.
And if you accurately fill that worksheet out using the online tool, like I have a client, they got a $2 refund. And that's what Congress wants you to get. They just want you to break even.
And really, that's what we should want too, right?
It is what we should want.
I mean, we
It
really don't
is.
want,
Yes.
We want to keep more of our money instead of
Throughout the
letting the
year.
government use it.
Right.
Yes.
Right. The sticky wicket is, though, if you have one time where you owe money, it's just a disaster for people. I mean, it really is
Right.
a shocker sometimes. So,
and especially if you're not prepared financially
Right.
for that,
Right.
it can be a big detriment, especially, so many Americans are living paycheck to paycheck, and it can be really hard to pay
Absolutely.
that. I'm sure you see
Totally.
that with people.
Oh, yeah. That happens every year. There's somebody, you just said that you hadn't filled out a W-4 in a long, long time. Well, the employers kind of can just keep those on record and not give you one of the new ones, or that's what often happens. So then someone gets a wild hair to give April a new W-4 here at the office. You fill it out as best you can, and all of a sudden maybe you're not thinking, you're like, oh, my paycheck went up this week. Cool.
I got a raise.
Even though you didn't get a raise. And so what happens is, at tax time, you're owing money or you're breaking even, and you're usually counting on that $1,000
Right.
to come back. So be very careful about how you fill those out, and I wish I had an easy answer for you on that. Most people are just doing the basics on it and filling it out. There's a little line at the bottom where you can say, hold out an extra $20 every week if you want. And you can kind of play with that depending how often your employer will let you turn in a W-4. And, you can kind of get your check
To
to
change
what
it
it
around
normally
to
is
see.
if you usually get a refund.
This kind of goes along with this, I think, but I always was confused, and like I said, my kids are in their early 20s, I've been helping them, but when they would apply for jobs and stuff, and it would ask, what is it? It asks about your deductions, where
That's
you
it.
either put the 0 or the 1 or whatever.
That's the W-4.
It's like, I
that's
don't know
what- yeah.
what to tell them.
Right.
but
Well, for
I guess-
young kids, single and 0.
Yeah.
But I believe this new form only lets you put single, and then it wants all this other
this other
gobbledygook
information.
down here. It's a
Okay.
little bit more confusing. So generally, though, the younger they are, they normally may not even need to have tax withheld because they're going to fall under that standard deduction and not owe anything. But sometimes these kids make a pretty good amount of money, and they love to get a refund.
Yeah, they do.
Yeah.
I remember, I love to get a refund now. We're just happy if we break even and, feels like we've done our
You've got
job.
a victory. A victory is breaking even. That's what's
And we're not having to
Start out-
take in. We're
It's so funny, you
happy.
start as a young adult and you start getting these refunds, but as you get a little bit older and like my age now, it's like, how much am I gonna owe?
I know,
Right.
it's unbelievable, yeah. One thing I would tell parents out there, if your son or daughter that you're claiming as a dependent is working, read your young person the Riot Act about do not you go and file on me, because the young kids have a tendency to bounce through there and claim themselves. And so then the parent comes to me and I claim they're dependent and the return kicks out. So then we have to go backwards and amend the child's return.
Right.
So that we can file the parent's return. So
Sounds messy.
yes, it's very messy. Kids have a tendency to just click these boxes and just, oh, cool,
Right.
And it doesn't even make a difference, so.
Yeah. So April's children are doing the right thing by getting her to help them.
I don't know about that.
If you're claiming them, just
I might
make
need to
sure.
send them to
Yeah,
you.
make sure they don't claim themselves if you're able to
Yeah.
claim them. That's the main
Yeah.
thing, yeah.
Wow, that's interesting. So Tom, how are some ways we can save during tax season? One thing that comes to mind, we have the chance, if we do get a refund, to get a rapid refund,
Mhm.
like to get it back early, but we usually have to take a little penalty for that or pay a little extra
Well,
for that, right?
I have never done those because I feel that it's really not worth any sort of fee to have to pay extra. It was a real big thing about, 30, 20, 15 years ago. But now the IRS that is one thing they are efficient on. If you will put your bank information
Right.
on there, you have the money back
Right.
usually in 10 days.
Right, and that's
And if
pretty
you
fast.
can't wait 10 days,
There's something
you've
else
got
going
bigger
on.
problems going on.
Right.
You really have to. Now, sometimes something can get gummed up in the works, but it's very rare. If your bank account information is written there accurately, you'll all of a sudden magically see that it just comes right in
It
there.
is fast, I know that, yeah.
Double check it, and if somebody else prepares your tax return, there's a tendency to just put the same as last year. Can't do that. You
Right.
have to verify it every year, because if you put the wrong bank account,
Can you change or
I
something?
mean, it could literally go to somebody else's account. So
that's
you've got to be
scary.
very careful about, if they happen to have that same
Right.
number or whatever, so
Wow.
make sure that you turn in the right routing number and account number,
Well, let's kind of switch gears here now
Sure.
and think about, after you get your return back, and if you do get a refund, if you're one of those fortunate few that get a refund back, what do you do with those refunds? I know a lot of people are like, that's my ticket to go shopping, or we're going to take a vacation.
That is, I think there must be a boom in refrigerators and dishwashers, right around March and April.
Yeah.
And a lot of people
Lots of sales.
truly do rely on that, and I get that. It's almost like a forced savings if you have too much held out.
It is.
And, you know, of course, I would always advise someone, just like the 401k or an IRA, all these things, if you start when you're in your 20s putting, I don't care if it's $100 a month away in a nice, good mutual fund, a nice, strong investment of some sort, you will be totally amazed. And time, I'm 61, time, I said my age, time.
You weren't going to.
Yeah, I wasn't going to. Time flies when you're having fun, and
Right.
before you know it, you are. And if you have saved that as you go, and the longer you wait, the harder it is to make it up.
Right.
And there is an epidemic right now of baby boomers who didn't save enough. Now, some did, but it's kind of sad.
It
So,
is sad, yeah.
you know, and most young people have absolutely zero faith in the Social Security system.
Right.
And so, if you really feel that way and you're young, you've got to start saving some
Put your
money.
money where your mouth is,
Yeah,
kind of.
yeah, exactly. Yeah,
Wow.
yeah.
I know Shelly and I, part of our jobs is to educate people on financial management. And, you know, one of the things we recommend, if you do get a tax refund, one thing you can do is start an emergency fund. If you don't already have some kind of emergency fund, just, you know, basic savings account, start that, put that money aside and save it for a rainy day. So that's one good way to use it. Another thing is if you've got credit card debt, that's a good way to pay off that credit card debt. Use that refund for that. Also, you know, if you can make an extra mortgage payment if you get enough back to make a mortgage payment. And I know if you do that every year, make one extra mortgage payment a year. I have forgotten how many. I guess it probably depends on the situation, but you can dramatically decrease how many more years you got on your mortgage.
That's amazing.
It really is.
How much a little extra will pay it down faster.
Yeah, it really is. So we recommend people do that. And this is something you may be able to speak a little bit more about also, Tom, is fund your child's 529 plan for college. And tell us a little bit about what the 529 is.
Well, it's a way of saving for college, and you put the money in, and whatever it builds up to while it's building is you're not taxed on, okay? And then as long as you pull that money out for qualified educational expenses, normally when they go to college, there are some exceptions, but normally we think of it as college. When they pull that money out, as long as it's spent for educational expenses, that's tax-free. Well, that's like money in the bank, because you could pay $10,000 over the year and now it's worth $30,000, and your child wants to go over to tech, you've got $30,000 to apply to their tuition, their books, their computers, all their costs to go into school. And with parents that have done this, one of the number one problems I have is they have extra money left over. Can you believe that? After the child graduates. And so it can go to the next child, or it can go to a niece or a nephew.
So it doesn't have to be a specific child.
Well, normally they're set up as a specific child,
But then
you
you can transfer
you
it
don't need
over.
it, you can transfer it, yeah.
So is it just for colleges and universities, or can it be for trade school or certifications?
Trade schools are fine, and gosh, I'd have to look it up. I
Okay,
think
yeah.
there are some exceptions now. No, I think the 529s are still college. I don't know. Don't hold me to that. I have
Okay.
to qualify myself a little bit.
So I didn't know if it could be, testing or certifications within whatever field.
Generally, it's tuition that it's cost of getting
The degree.
a specific kind of education that
Okay.
allows you to do some sort of profession. And I do believe that would cover something like, we've all heard about, linemen on electrical lines. That would be counted
Okay.
as well, so.
Well, now I've got a question about that. Is it too late? Because I have one child that's still in college. She's got about a year. Well, I guess she may have 3 if she goes on to graduate school. Can I still do that? Is it too late to start?
You could do it, but here's the problem. You don't have enough years to build traction.
Oh,
Because
yeah.
if you invest it, the market's kind of choppy. So anytime you have money that you need short term,
Yeah, I
you're
got
probably
you.
not going to get your
Gotcha.
bang for your buck.
Yeah.
But there are tax credits for education. So always keep that in mind.
Okay.
If you have tuition that your child is, you're having to pay out of pocket and your income is below certain levels, This, it's called the, it's the American Opportunity Credit, and it can be as much as $2,500.
Okay.
Depending again on your income level and things like that. So always make sure, either if you're doing your own return or if you have it prepared, let them know about college costs, because they may be able to do something with it. And also, if both spouses are working and you have daycare costs, let them know about that. A lot of these daycares will send you a statement now.
They
and
do.
you can get a credit for that if both spouses
Thankfully,
are
I'm out of that
Yep.
part of my life.
Yep.
Which we had great experiences, but I'm just glad I'm done paying for that part.
Parents always tell me it's way more expensive to rate. Oh, well, they take you've heard of the tax exemption, the dependency exemptions. Well, they took those off once the child hits age 17, and all the parents are always like, that's when they get the most expensive. Because of prom and this and that.
All those things.
So,
Very true.
It's funny, but it's a blessing. It's,
that's right.
It's wonderful.
That's
so.
right.
Well, I have a fun question for
Yeah.
you, Tom. What's the craziest or funniest or silliest question anybody's ever asked you, or?
Well, I get all sorts of funny things when people drop their information off, including their vacation photos, and it's this is really random. Why are you sending me? This is I'm glad you got to the beach.
Why would
It's like,
somebody
nice-
send that to you?
Is it just proof to show that for something with taxes?
This is one of those things. We're in the South. Bless their heart. They're just they're just not organized, and probably the envelope just fell in there or something. And
So you get to look at Fiji or wherever.
Yeah. So we do try to point that out, and they say, "Oh, I've been looking for those." But then they always make jokes about can I claim their dog or their cat?
Really?
And I say, well, if you can get the dog or a cat a social security number, I will consider it. Bring that in.
That's funny.
And
Well, I'll tell you a funny one that I asked my tax person a year or two ago. Can I count my hair appointments?
I bet a news anchor could, but that would be a case of their employer probably provides that benefit in the studio.
Oh, yeah,
Yeah,
yeah.
Which I didn't get any powder before this started.
Oh yeah, we're low maintenance here, Tom. Sorry.
I know also during, just some general advice to give everybody is during tax season, you're going to start getting promotional things from credit card companies, and you're going to
that's
see
true.
car dealerships and retailers and stuff, and they're going to target really everybody, like spend your tax refund. You're going to see a lot of promotional stuff on it, so just.
So when you talk about people getting these online offers, it could even be for free tax preparation. Free this, free that. Get this credit card, we'll give you this much money off. And my economics professor at UT, he told the whole class, and I'll never forget it, he said, always remember TANSTAFL. And I won't spell it out, but it's an acronym. It's a TANN, but you know what it stands for? There ain't no such thing as a free lunch. So if somebody's offering you something for free, there's some sort of price built in there. That's basic economics. So if you are being offered anything in your life that sounds too good to be true, or that doesn't have a cost, or that is not disclosed to you, that is a huge red flag, because you're paying for it some way. Just like some of the websites that we go to.
Right.
You see ads popping up and all that. And you might say, well, I'd never buy any of that stuff I see. You might be surprised.
Yeah.
But that is the
Or we
case.
might have paid for it in a different way. Because like in extension, lots of our services are free, but we're also, paid for by state, local, and federal government.
That's right.
So, our tax dollars have
That's
already
right.
paid for the
That's
service for us. So.
Yes. So I think that's a very good, always keep that in mind.
Yeah, that's a great idea.
Well, I never knew taxes could be so much fun.
I didn't either.
I've learned a lot today.
I was real worried about this topic.
You're hired.
I wasn't sure what to think about it when we came up with this topic. So I just feel like I didn't know anything. I mean, I get my taxes done and I do what I'm supposed to do. But other than that.
People have a lot of anxiety about money, and take a deep breath, give yourself confidence,
Yes.
and just try not to tense up over it, because it's very much a lot of the things that April is sharing with us.
And don't wait till April 14th to do it.
Just like anything, don't procrastinate.
Yeah.
And I do think too, this tax season is a good time to do a financial checkup. And we do recommend a free resource, but it really is free.
Good.
There might be some ads on there, but it's annualcreditreport.com
Oh,
to
yeah.
check your credit report. And
Mhm.
then also, if you need help with debt elimination, we have a great debt elimination tool and extension called powerpay.org. And so that's a great tool to use as well.
Mhm. Fantastic, yeah. No, there's some really good things out there on
Yeah.
the web, no doubt about it. Just get your information from good sources.
That's right.
Yeah.
Well, Tom, we really appreciate you taking time to come speak with us today, and it's a timely topic, and hopefully everybody can get some useful information out of it. And how can people get in touch with you if they've got more questions?
Oh, you can do a Google. We've always said Janney, but it's two N's, Janney, or Google Gammon and Drueck, our new partners, the CPAs, or our phone number is 597-1559 if you want that.
And we'll put your information in the comments too,
Yes.
and the information that way people can
Well, that's
get in touch
nice.
with you.
And we also have a cup so that you'll remember this experience
Our
forever.
pictures, our pictures
So
are
our
on this
pictures
side.
on.
Oh, well, now, if I would have been told that, I would have been here a year ago doing this. Cool.
That'll be something to
Thank you.
remember your time with us,
Thank
and I'll always remember, talking about you being in the marching
Yeah,
band.
let's
That's
just come back and have a band discussion.
I think we should.
Yeah, every year that I go and watch the ball game and I see the logo, I'm like, where's Tom at? Where's the trombone?
Or the DeKalb County Marching Band,
Oh.
Pride of DeKalb County.
That's
That's
right,
what I
I
like
love
to
our
call
band.
it.
Yeah,
So
totally.
it's a great band, and Wilson County's got tons of great
Oh, they do,
bands,
yeah.
and so that's really fun to
Yeah,
know too.
yeah.
So it's been great having you
Thank
here,
you.
Mr. Tom.
Thanks for having me. Thanks for having me.
You're welcome. Well, until next time.
We're raising kids, eating right, spending smart,
And living well. Bye-bye.
Bye-bye.